Hi everyone, today we'll be going over accounts, February-March 2021, paper 3-2, question number 2. This is structure paper 3, which consists 6 questions, each of 25 marks, and we are also given a time limit of 3 hours. So we will be attempting to solve each question under 30 minutes. And this question number 2 is part of section A, which deals with financial accounting. Now, without any further delay, let's get started. Sunshine Social Club is a sports club and has a year end of 31st December. The club started admitting life members in 2015. It is the policy of the club that a life membership fee is initially credited to a life membership fund and recognized in the income and expenditure account over 5 years equally. Alright, and life membership fees received in the previous 5 years were as follows. So for the first part of this question, we need to calculate the life membership fund shown in the statement of financial position at 31st December 2019. So what we know is that initially the fee is credited to a life membership fund, right? But it is being recognized in the income and expenditure account over 5 years equally. So if we're talking about the life membership fee received in 2019, this will be recognized in our income and expenditure account for 2019, 2020, 2021, 2022, 2023 equally, right? And since we are asked to figure out the life membership fund shown in the statement of financial position at 31st December 2019, it means that for 2019, it has already been realized in the income and expenditure account. So we only have the amount remaining for the next 4 years income and expenditure account in the life membership fund, right? So out of this amount of 6,500, 1 part out of 5 parts has already been recognized in the income and expenditure account. So only 4 parts out of 5 parts remain in the life membership fund, right? But if you're talking about 2018, that's for the year 2018, 19, 20, 21, and 22, right? And since we are talking about the life membership fund at the end of 2019, for these 2 years, it has already been recognized in the income and expenditure account. So only the 3 years fee is remaining. So out of the total amount of 4,000, 2 parts out of 5 parts has already been recognized. So only 3 parts out of 5 parts remain as the life membership fee, right? So for 2017, that would be 2 parts out of 5 parts. For 2016, that would be 1 part out of 5 parts, because for the remaining years, it has already been recognized in the income and expenditure account. And for 2015, that's going to be 0 parts out of 5 parts, because all of this amount has already been recognized in the income and expenditure account over 5 years, since this is 2015, 16, 17, 18, and 19, right? So all 5 years has already been recognized. So in this way, we will now figure out the total fund. Let's create a statement. Okay, so we are talking about our years 2019, 18, 17, 16, and 15. And we already figured out what parts of it will remain in our life membership fund. So for 2019, that will be 6,500, and only 4 out of 5 parts remain. So we just need to multiply these two together for all these amounts. So for 2019, that's 6,500 times 4 by 5. Let's write it down. And this results in the amount of 5,200. Now we repeat the same process for 2018. So the total is 4,000, and only 3 out of 5 parts remain in the life membership fund. So that's 4,000 times 3 by 5. And this results in the amount of 2,400. Now for 2017, out of the total of 4,500, 2 out of 5 parts still remain in our life membership fund, right? So we just need to multiply these two together. That's 4,500 times 2 by 5, which results in the amount of 1,800. Now for 2016, that's 2,000 times 1 by 5, right? So just write it down. And this results in the amount of 400. Now we have our final year 2015. And we can see that out of the total of 1,000, 0 out of 5 parts remain. So we're just going to multiply this together. That's 1,000 times 0 by 5, which results in 0. So now in order to figure out the total for our life membership fund, we just need to add all of these amounts. That's 5,200 plus 2,400 plus 1,800 plus 400 plus 0, which results in 9,800. So this is the value of life membership fund to be shown in the statement of financial position at 31st December 2019. This concludes the first part of this question. We can now move towards the second one. We are given additional information regarding the receipts and payments account. First of all, let's have a look at our question. We need to state three differences between a receipts and payments account and an income and expenditure account. Okay, so the very first one is that receipts and payments, as the name suggests, is a summary of cash receipts and payments, whereas income and expenditure account is a summary of incomes or revenues and expenses, right? And the major difference here is that receipts and payments account can include the receipts that we have gotten for previous year or the new upcoming year, but income and expenditure account can only include the incomes and expenses of this particular year. Let's write it down. Receipts and payments account is a summary of cash receipts and payments, whereas income and expenditure account is a summary of incomes and expenses. Okay, and the second difference is that receipts and payments account can include both capital as well as revenue items, but if we're talking about income and expenditure account, it can only include revenue items, right? So if we are making purchase of a non-current asset, that will be included in our receipts and payments account, but in an income statement, only the depreciation charge will be included, rather than the total payment made for the acquisition of that particular non-current asset. Let's write it down. Receipts and payments account includes both capital and revenue items, whereas income and expenditure account only includes revenue items. And thirdly, receipts and payments account includes only cash items because, as we said above, it is the summary of cash receipts and payments, right? But if we're talking about income and expenditure account, it includes both cash and non-cash items. So an example of a non-cash item would be depreciation charge to non-current assets, because it is not really a cash out from our company, but we still charge it, right? Let's write it down. Receipts and payment account includes only cash items, whereas income and expenditure account includes both cash and non-cash items. Alright, this concludes the second part of this question. We can now move towards the third one. We now need to explain to the treasurer, with reference to the appropriate accounting concepts, the accounting treatment of the special donation of 10,000 in the financial statements of the club. So this must have been mentioned in the above additional information that we skipped. So let's refer to it. So we're told that the treasurer of the club has prepared the receipts and payments account for the year ended 31st December 2020 as follows. And then a special donation of 10,000 is received during 2020, is designated for the club's anniversary activities in 2022. The treasurer is unsure whether this amount should be treated as income for the year ended 31st December 2020. Okay, so we also need to refer to our accounting concepts, right? So in this case, there is a special donation that is designated for 2022 anniversary activities, but it is being received in the year 2020. And there is a conflict whether to deduce it as an income of this particular year or not, right? So I'm just going to first write down the scenario. Special donation is designated for 2022 anniversary activities. And since it is to be utilized as an expense for the year 2022, it should be deferred and to be recognized as an income in 2022, right? And this is the case because we are following our matching concept, which tells us that we need to match income with expenses. So in this case, we're just trying to match the income of this special donation with the expenses for the 2022 anniversary activities. So let's write it down. It should be deferred and to be recognized as income in 2022 in order to match the 2022 anniversary activities expenses under the matching concept, which states that income should be matched with expenses. And we concluded that it should not be recognized as income in 2020, right? So how do we record this? In this case, we need to record this as a deferred income or fund in the 2020 statement of financial position, which we will use in the year 2022. Let's write it down. It is not recognized as income in 2020 and should be recorded as deferred income in the 2020 statement of financial position. And we are not recording it as an income because it would overstate it, right? Which we are following under the prudence concept. So under the prudence concept, and prudence concept states that income should not be overstated, which states that incomes should not be overstated. And this concludes the third part of this question, so we can now move towards the fourth one. We are given additional information, so I'm just going to look at the question first. We need to prepare the income and expenditure account for the year ended 31st December 2020. And we are also given the space in order to do all of the workings, but I will be doing it all over the question paper, but make sure that you guys show all of your workings in that particular box. Okay, we are required to prepare the income and expenditure account, so I'm just going to have a look at our additional information. During the year ended 31st December 2020, an item of fully depreciated club equipment which had an original cost of 8,000 was sold for 2,200. So in this case, we are told that the club equipment is fully depreciated, and whenever we're talking about fully depreciated items, its net book value is just going to be 0. Right, and we can see that its sales value is 2,200, which is obviously greater than net book value, which results in profit on disposal. And this profit on disposal is just the difference between our sales value and net book value, which in this case is 2,200 minus 0, which results in 2,200. Okay, then it is the club's policy to depreciate club equipment at an annual rate of 20% using the reducing balance method. A full year's depreciation is charged in the year of acquisition. Okay, let's figure out the depreciation. And we were given our receipts and payments account right here. So we can see that there was a new purchase of club equipment which has the cost of 24,000, and we are also told that a new purchase is to be depreciated for the full year. So we need to charge full year's depreciation to this amount of 24,000, right? And then we must have also been given the actual net book value of the club equipment. Okay, we weren't given anything above, but we are given it right here that the cost was of 88,000 and the accumulated depreciation was 52,000. So we can easily figure out the depreciation for the year, right? So I'm just going to write it down below. Okay, right here. So depreciation for the year. And we know that we are providing depreciation using reducing balance method, which means that we need to charge this rate to our net book value. So let's figure out the net book value first. That is just the difference between cost and accumulated depreciation, which in this case is 88,000. This is the cost, and we need to subtract our accumulated depreciation of 52,000. And we also know that we purchased a new equipment at the cost of 24,000, so we just have to add this as well to the cost. And then we're told that we also dispose of fully depreciated club equipment. And whenever we're talking about disposal of those assets, we need to subtract its cost from the total cost and its accumulated depreciation from total accumulated depreciation. So in this case, the cost is 8,000, right? So I'm just going to subtract it from our cost. And we know that it is fully depreciated, which means that its net book value is 0. And that is only the case because cost is equal to the accumulated depreciation. So we need to subtract the accumulated depreciation as well. And that's a double negative, which results in a positive. So that's plus 8,000. And now we can just apply our rate of 20%. So that's times 0.20. So this gives our depreciation charge for the year to be 88,000 minus 52,000 plus 24,000 minus 8,000 plus 8,000 times 0.20, which results in the value of 12,000. Then we are given the balances at 31st December 2020 and at 31st December 2019. Okay, so we've included these amounts. So let's figure out our total subscriptions. So that's membership subscription. And we start with the total amount that we received, which is given in our receipts and payments account. Let's have a look above. Okay, we can see that we received a total of 73,000 as our membership subscriptions. So we are going to start with this amount. That is 73,000. Now the first one is our membership subscriptions in advance. And for the year ended 2020, the advance subscription is 1,100. And since we are preparing the income and expenditure account for this particular year ended 2020, we should not be including the incomes for the next year, right? So we just have to subtract this advance for the next year, which is minus 1,100. And we can see that for the year ended 2019, the advance amounted to 2,700. So if this is the advance for the year ended 2019, this means that this should be the membership subscription for the year 2020, for which we are preparing our income and expenditure account, which means that this membership subscription fee of 2,700 should be included in this year. So that's plus 2,700. Then we have membership subscription in arrears. So for 2020, we can see that some members are still yet to pay 1,800 as their membership fee for this particular year. So this should definitely be included, right? So that's plus 1,800. And for 2019, the arrears amounted to 3,800. And remember that this is a membership subscription that some members are yet to pay for the year of 2019. And since we are preparing the income and expenditure account for the year 2020, we should not be including the incomes for 2019. So we have to subtract this amount. That's minus 3,800. So this gives the total membership subscription for the year ended 31st December 2020 to be 73,000 minus 1,100 plus 2,700 plus 1,800 minus 3,800, which results in the value of 72,600. And this is a membership subscription, which definitely is an income. So let's include this in our income section. Okay, so the very first one is membership subscription which we just figured out to be 72,600. And we also concluded that there was a profit on disposal, which is again an income, right? So let's include this value of 2,200 as well. That's profit on disposal of 2,200. Okay. Then we're also told that the club offered life membership, right? So we obviously have to include the life membership fees received as an income as well. Let's have a look at the above information. Right here, we were told that the life membership fee is to be recognized in the income and expenditure account over 5 years equally. So if we're talking about the life membership fee of 6,500 for 2019, this is to be realized in the years 2019, 20, 21, 22, and 23. And we are talking about income and expenditure account for 2020, right? So obviously for 2020, it's going to include 1 out of 5 parts of this value. So that's 6,500 times 1 by 5. Similarly, for 2018, it is to be recognized in 18, 19, 20, 21, and 22. So obviously for 2020, this will include 1 out of 5 parts of this amount. So that's 4,000 times 1 by 5. And for 2017, it is to be recognized in 17, 18, 19, 20, and 21. Again, it should include 1 out of 5 parts as an income for the year 2020. So that's the total of 4,500 times 1 part out of 5 parts. For 2016, it is to be recognized in 16, 17, 18, 19, and 20. So obviously this will also be included. So that's 1 out of 5 parts of the total of 2,000. But for 2015, it is to be recognized in 15, 16, 17, 18, and 19, which means that this value will not be included as an income for 2020. But remember that we only included the life membership fees up to 2019, but this should also include the life membership fees for 2020, right? We must have missed some information below. Okay, right here, we can see that this is the receipts and payments account for 2020, and we received the life membership fees right here of 8,000. And this will be recognized as an income for the year 2020, 21, 22, 23, and 24. So we should be including 1 out of 5 parts of this amount as an income for our year ended 2020. Let's include this as well. So that's plus 8,000 times 1 by 5. And this gives our total life membership amount to be recognized in our income and expenditure account for 31st December 2020. That's 6,500 times 1 by 5 plus 4,000 times 1 by 5 plus 4,500 times 1 by 5 plus 2,000 times 1 by 5 plus 8,000 times 1 by 5, which results in the total amount to be included in our income and expenditure account to be 5,000. Let's include this. So that is 5,000. And I don't think we have any other incomes because this is expenses as well, and this is expenses. So we can just figure out the total for income by adding these three amounts. So that's 72,600 plus 2,200 plus 5,000, which results in the amount of 79,800. Now we can move towards our expenditure, right? And the first expenditure, we already figured out our depreciation. So we need to include the amount of 12,000 as the depreciation for this year. Let's write it down. So that's depreciation of club equipment, which we figured out to be 12,000. And we are told that there was clubhouse expenses, right? So we need to include this in our expenditure as well. That's clubhouse expenses. And we are only given the accrual here. So the original amount will be given in our receipts and payments account. Let's have a look. We can see our clubhouse expenses right here, which amounted to 37,000. So we will adjust the accruals to this amount. That's 37,000. All right. And we can see that the accrual at the end of 2020 is 0. So no clubhouse expenses is yet to be paid for this year, right? But for 2019, we can see that the accrual amounted to 2,660, and this just means the clubhouse expenses yet to be paid for the year 2019. And since we are preparing the income and expenditure for this year, we should not be including the expenses for last year. So I'm just going to subtract this. And this results in the clubhouse expenses to be included in our income and expenditure account to have the amount of 34,340. Let's write it down. And we also have administrative expenses. So we need to include this as well. And we are given the original amount in our receipts and payments account. So let's have a look. Right here, the administrative expenses amounted to 46,000. So we will be starting with this amount and adjusting all of our accruals to this amount. So that's 46,000. And we can see that the administrative expenses paid in advance for 2020 is 0. So no advance payment is made. But for 2019, we can see that it amounts to 4,200. And since this is an advance payment, so this reflects the administrative expenses for the year 2020. And since we are preparing our income and expenditure for 2020, we need to include this amount of 4,200 as well. So I'm just going to add it. Then we have administrative expenses accrued. And for the year 2020, it amounts to 650, which means that we are still yet to pay 650 as our administrative expenses for the year 2020. So we need to include this amount as well. So that's plus 650. And we can see that for the year 2019, accruals were 0. So we do not need to adjust it. Now the total amount to be included in our income and expenditure account under the heading of administrative expenses is 46,000 plus 4,200 plus 650, which results in 50,850. Now these are all of our expenses, so we can just figure out the total by adding these three amounts. That's 12,000 plus 34,340 plus 50,850, which results in 97,190. So we can clearly see that expenses is greater than our income, right? Which means that it will result in a deficit. So that will be the difference between our expenses and income, which is 97,190 minus 79,800, which results in the value of 17,390. So this just represents our loss or excess of expenditure over income. And this concludes our fourth part of the question. So now we can move towards the fifth one. Again, we were given the workings. Instead of scribbling all of the question paper like I did, you guys should be showing all of your workings in this particular box. We are given additional information. The chairman of the club decided to transfer 6,000 from the accumulated fund to a fund designated for the anniversary activities on 31st December 2020. So we need to figure out the accumulated fund at 31st December 2019. Okay, so we were given our information regarding the year 2019 right here. So we'll be using this information and the information that for any club and societies, assets is just going to be equal to the accumulated fund plus our liabilities, right? So in order to figure out the accumulated fund, we just need to subtract our liabilities from assets, right? So let's write down the first asset, which is club equipment. And we are given the cost and accumulated depreciation, but remember that we need to include its net book value, right? So that's going to be 88,000 minus 52,000, which results in the net book value to be 36,000. So we'll be starting with this asset amount of club equipment. Let's write it down. So the very first thing we have is our club equipment with the value of 36,000. Okay. Then we are given member subscription in advance, which means that this is an advance income, right? And we know that advance income is a type of liability. So we need to record this amount of 2,700 as a liability. And since we are subtracting the liabilities from asset in order to figure out the accumulated fund, I'm going to write it down in a bracket. So that's membership subscription advance, which amounted to 2,700. And this is a liability, so we're subtracting it. Then we have membership subscription in arrears, which is that we are yet to receive this, right? Which means that this will be our asset. This is an accrued income. So this is an asset. We need to add this value of 3,800. Let's write it down. That is membership subscription, which is accrued. and this amounts to 3,800. Okay. Then we have our administrative expenses paid in advance. So this is an advance payment, right? Which means that we are yet to receive the services for this value. So this will be our asset, and we need to include this value of 4,200 in our statement. Let's do that. So administrative expenses advance, which is 4,200. Okay. Then there is clubhouse expenses accrued. So this is the expenses that we are yet to pay, right? So this is an accrued payment, which means that this is a liability, and it amounts to 2,660. So we just have to subtract this in our statement. So that's clubhouse expenses accrued, and that's 2,660. Then we are also given administrative expenses accrued. Again, this is an accrued payment, so it will be a liability, but this amounts to 0, so we do not really need to include this. And we already figured out that the life membership fee is also to be recorded. And we already figured out that life membership fee is also to be recorded as a fund, and funds are presented on our accumulated fund plus liability section, right? So we also need to subtract that life membership fund for the year 2019 in order to figure out our accumulated fund. And we already figured it out at the first part of our question. It amounted to 9,800. So let's subtract this. That is life membership fund with the value of 9,800. Okay, and finally we also have our cash balance presented in our receipts and payments account, right? We can see that our opening balance is the closing balance for 2019, so we will record this 3,200 as an asset, which means that we will add this amount. Let's do that. So that's going to be the cash balance of 3,200. Now we can easily figure out our accumulated fund at 31st December 2019, and this is just going to be the sum of these 7 amounts. That's 36,000 minus 2,700 plus 3,800 plus 4,200 minus 2,660 plus 9,000. Okay, this is an error. We need to subtract life membership fund, so that's a negative. So that's minus 9,800 plus 3,200, which results in the accumulated fund to have the value of 32,040. This concludes the first part of the fixed question. Now, for the second part, we need to prepare a statement showing the movement on the accumulated fund for the year ended 31st December 2020. Okay, so we will start with the opening balance. So that's accumulated fund at the opening date of 1 January 2020. And the closing value for last year will just be the opening value for this year, right? So that's going to be 32,040. Let's write it down. And now we need to write down all of the movements. So the very first one would be the profit or loss that we figured out from our income and expenditure account above. This is for the year 2020, right? And we figured out that there was a deficit. So this deficit obviously reduces our accumulated fund. So we need to subtract 17,390. Let's do that. So that's a deficit for the year of 17,390. Okay, and the second thing is that we need to transfer the life membership fund. All right, let's have a look at the above information. Okay, right here we're told that the chairman of the club decided to transfer 6,000 from the accumulated fund to a fund designated for the anniversary activities, which means that this will reduce our accumulated fund. So we just have to subtract 6,000, and this can be recorded under the heading of transfer to our anniversary fund, which amounts to 6,000. So now we can easily figure out the accumulated fund at our closing date, which is 31st December 2020, And this is just going to be the sum of these 3 months, 32,040 minus 17,390 minus 6,000, which results in the value of 8,650. And this concludes our 5th question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.